Everything that is explained in this video is summarized from CoinMarketCap. And also, please don't forget to support my channel for more XRP updates and some other cryptocurrencies as a whole. Now take a look at this. Ripple versus SEC, good news from court on crypto and XRP secondary market sales. Ripple versus the United States Court of Appeals for the Second Circuit made a significant change for the cryptocurrency sector and regulation when it ruled that sales of cryptocurrency on the secondary market do not constitute securities. This decision was made in response to a complaint filed by Coinbase. In the case of SEC v. Ripple Labs, the ruling made by the federal judge is a significant precedent that prevents the United States Securities and Exchange Commission from challenging the sale of XRP on the secondary market. According to John Reedstark, a former officer with the Securities and Exchange Commission, Judge Fayella entirely rejected the idea that the rationale that Judge Torres gave in the Ripple ruling, which was that secondary sales cannot be investment contracts, was a significant blow to Coinbase and Ripple. On the other hand, the recent decision in a case filed by Coinbase has shed a great deal of light on sales on the secondary market. Coins that are sold on secondary markets are not considered securities. Paul Grewal, the chief legal officer of Coinbase, recently made a statement on X in which he disclosed that the company has obtained significant clarity from the United States Court of Appeals for the Second Circuit in Manhattan, New York City. Notably, the court building that is being used for the Ripple versus SEC case is the same one. As stated by Paul Grewal, what is clear under the federal securities law is that there is no private liability for the secondary trading of digital assets on exchanges such as Coinbase. In addition, he stated that the court concurred with Coinbase's assertion that there are no investment contracts for secondary sales of tokens, contrary to what the plaintiffs had claimed. Federal claims were brought forward by the plaintiffs by Sections 5 Act of 1933 of the Securities Exchange Act of 1934. In addition to this, they had filed claims under state law, specifically under the securities statutes of the states of California, Florida, and New Jersey. According to the findings of the court, Coinbase did not possess title to the tokens that were purchased by the plaintiffs, and thus was not a statutory seller that was susceptible to liability under the first prong of the Pinter case. When individuals buy or sell digital currency on the Coinbase exchange, what they are actually doing is not buying or selling to Coinbase. This is one of the primary points that Coinbase won against the plaintiffs. A significant victory for Ripple and the cryptocurrency industry. Judge Torres ruled that an institutional buyer knowingly purchased XRP directly from Ripple under a contract. However, the economic reality is that a programmatic buyer stood in the same shoes as a secondary market purchaser who did not know to whom or what it was paying its money. This decision is a significant victory for Ripple and the cryptocurrency industry. As a result, Judge Torres did not come to any definitive conclusions regarding the nature of sales of XRP on the secondary market and stated that this matter was not properly brought before the court because it does not meet the requirements of the Howey test. The judge decided that programmatic sales of XRP do not constitute securities, following the statement made by Judge Fayella that transactions in crypto assets on the secondary market are not categorically barred from creating investment contracts. The XRP Army expressed fear that the SEC would appeal secondary sales after the verdict was made. On the other hand, the most recent ruling from the Second Circuit establishes a solid precedent that can be used to refute any appeal of this kind filed the United States Securities and Exchange Commission. Anders, a well-known figure in the field of cryptocurrency studies, has just made a forecast concerning Ripple that has generated a lot of enthusiasm. Ripple is reportedly on the cusp of a revolutionary move, which is the creation of liquidity pools for XRP on automated market makers, utilizing its USD stablecoin, USD. This move is expected to be released shortly. The purpose of this strategic maneuver is to improve liquidity for both Rust and XRP, with the end goal of permitting a seamless connection with decentralized exchanges and customer on-demand liquidity and services. I believe that Ripple will initiate a liquidity pool on the AM by the end of this year because they will be issuing their very own USD stablecoin. They will be able to effortlessly supply liquidity for both Rust and XRP, causing it to be extremely liquid. It is a good fit now that the DEX has been incorporated into the ADL. Even though Ripple has not been directly involved in this development, the mere prospect of it has generated a significant amount of interest. This liquidity pool is expected to become a focal point, and analysts believe it has the potential to become the most liquid pool in the market. The realization that Ripple has a significant influence and the potential to gather a significant amount of community participation is the source of this excitement. A new impetus has been introduced into the cryptocurrency industry as a result of the announcement, particularly in light of the continued volatility that surrounds XRP currency. Ripple's move has brought a glimmer of hope, which is reflected in a noteworthy 7 jump in the price charts of XRP. This is despite the gloomy feeling that has been prevalent. XRP has reached a critical milestone in its quest to restore market importance. And this increase not only indicates that the downward trend may be about to reverse, but it also indicates that the trend may be about to reverse. Analysts are bullish about the direction of XRP, considering that they have their sights set on critical resistance levels. The mark of 62 cents is particularly significant, since it may be the beginning of a positive momentum that will pave the way for further appreciation. The overriding objective is to capitalize on the forward momentum of XRP, and targets have been established at 65 cents and 69 cents respectively. Price moves that have occurred recently point to a positive outlook, with XRP seeing a 3.6 increase over the last 24 hours. Ripple's strategic initiatives are likely to stimulate additional market activity, which is expected to continue this trend, which is predicted to continue. In the process of Ripple's efforts to execute substantial changes, the introduction of liquidity pools for XRP on AM has the potential to act as a cornerstone in strengthening the company's position in preparation for the imminent bull market. A portion of Grayscale Investments holdings in Cardano were sold off, and the proceeds were transferred to XRP. Because of the rebalance, the proportion of XRP in the DLC fund has increased to 1.73%. The total assets that are now being managed by the DLC fund are estimated to be worth $570,206,758.29. The digital large cap LLP Wall Fund, which is Grayscale Investments' presently available product, has received a significant modification that has been released. A portion of the organization's holdings in Cardano have been sold off in preparation for exit during the current quarter. All of the remaining funds were bought back and put into XRP and other assets of a similar nature that were owned by the fund. To restore the correct balance of assets, it is necessary to sell Cardano merchandise. The proceeds from the sale of these funds were used to entirely finance the acquisition of an asset. One of the most notable transactions that Funland made was the purchasing of XRP, which resulted in a considerable expansion of the company's DLC holding. Therefore, as of the time that this report is being written, XRP constitutes 1.73% of the fund, or 16.7 million tokens when these numbers are rounded up. According to Grayscale's official website, the DLC Management LLC fund has a total of $570,206,758.29 worth of assets under management in its possession.